What's good, YouTube? William back officially with video number 3 today. And as always, we're going to kick it off with the girl, AMC. As we all know and saw today, we had a little bit of a red day, or in other words, a pullback from yesterday's positive momentum day. We were actually down 5.66%, or in other words, $2.28 from yesterday's ending. Looking at the intraday chart, as I've always explained to you guys from the beginning, I don't initiate trades within the first 15 minutes. Using that trend today, as you can see from the start, within the first 15 minutes, we were trending below the 50, the 100, and the 200-day moving average we discussed yesterday. Outside of that, looking at the MACD, you can see that we were in a bearish period, or in a selling period, as the red line, or the green line, had converged under the red line. Now, if you also look down a little further, looking at the RSI, which is a momentum indicator, you can see we trended to the lower half for the majority of the day. Tried to touch the neutral, which was in the middle, which is normally rated as 50, 70 being high, 30 being low. We stayed consistently somewhere in the middle to the lower bottom area. And again, when it comes to the RSI, you normally want to see that 50 and above. In the intraday chart, as I mentioned, the indicators are only going to read the candles on the current chart, right? So the more candles, the more crazy the MACD and the RSI is going to be. However, we want to get a better perspective. Again, my favorite chart, 1 year, 1 day chart. Now, obviously, there's a lot significant less candles on the chart to read. So the indicators are going to give us some more trend data over longer periods of time, right? On the 1 year, 1 day chart, as you can see, we're still consolidating right there at that 50-day moving average. Looking at the MACD, we have a smaller red bar, and we are even one step closer to the green line converging over the red line, starting off our next buying period. More importantly, look at the RSI, or the bottom indicator. As you can see, 70 being high, 30 being low. We are trending towards that neutral 50 area. I think we're right below it at 40. I think it was 44. We can actually use a different chart at one of my other investment firms to give us a more accurate number. It gives a lot more accurate reading at Webull. Going into Webull, RSI for today, as you can see, 44.68% as I estimated. So again, all good signs. Again, this is a short squeeze play. It's not your typical stock investment you buy and hold for the next 7, 8, 10 years, right? We are all specifically in this play for something specifically known as a short squeeze. Essentially, for those that don't know or have not looked into it or studied it, a short squeeze is when a hedge fund or a big institution shorts a company stock, estimating that the price will go down, or in other words, bets that the price will go down significantly, even past zero in this case, right? And it got really close. The 52, if we look at the stats for the year, we can look right here. The 52-week low was $1.91, as you can see right here. So hedge funds got really close to the zero goal. For those that do not know or have not researched it, getting a company to zero is celebrated by hedge funds. But in either case, that's our day for AMC today, essentially. While we're here, I did want to teach you guys a couple of different things. Number one, I know I started making off videos on Instagram, and I utilized heavily Robinhood. Since then, I have updated my opinion on Robinhood. I no longer, or have slowly but surely liquidated my account there, and have started transitioning out to other investment firms. The biggest holding going to be Charles Schwab, TD Ameritrade, Webull are 3 other ones that I use, as well as Merrill Lynch. I have an association and affiliation with Merrill Lynch for long periods of time. They also hold my 401k. But for my personal investment, TD Ameritrade, Webull being the top 2 favorites, and then Charles Schwab I utilize for long-term investments, as I appreciate and like their benefits a lot more. I would encourage all of you, if you've not looked into the whole Robinhood scandal that happened in January, when they halted trading on GME, GameStop, and AMC. It was a pretty big ordeal. They had congressional hearings about it. Since then, I've done my own research. and I don't like what I found. So personally, I choose not to do business with them. The only thing that I'm holding at Robinhood at this time are option contracts, which as soon as those expire or I sell them, the remaining of my funds there will also be liquidated and either pushed to TD or Charles Schwab. The reason why I have so many, I have 2 young sons, as I explained in my bio. As each one of my sons was born, I opened up an investment account, started putting money into it, so that one day, if my plan goes according to plan, I will be able to give them a nice starting base they can choose to do with whatever they want to do in life, right? That's the goal. But it's a little bit as to why I have so many firms. Again, all of them are holding AMC at some point, some in really large quantities, others in smaller. But again, the point is to buy and hold, as I've been stating in IG since January through now, and now that I'm in YouTube making these videos again, that's still the same principle. But the point of the video today was to give you an update on AMC, but as well kind of also touch base on how you guys can kind of learn to do your own research on information. Again, AMC is a really easy pick to make these videos because there's so much focus on AMC. Everyone that you could imagine talks about this. If you go on Twitter, there are endless millions of pages of posts just on AMC. You go to Reddit, same thing. You go on YouTube, there's thousands of videos, right? Everybody has an opinion, everybody giving new information. But the one thing I notice, or for the most part, not everyone, right, but the majority, they don't teach. They don't teach you how to look up your own information. And that's the fundamental principle of why I want to make these videos, so that you can learn to do it on your own. You don't have to rely on anyone, right? It's not about giving you a fish. Teaching you how to fish is the key. So today we're going to start off touching a couple little things I like to look at when I look at any stock, not just AMC, but specific things I look for. They give me my sentiment as to whether I want to go all in on a stock, or if I don't want to touch it with a 10-foot pole. Starting with, we'll start real quick, in Webull. At the bottom of their stock charts, they have something called an order flow distribution chart, which is this thing here. So what this thing is telling you, essentially it's a pie graph broken down by buys and sells, by large, medium, and small orders. But as we can see, the focus of it is the inflow versus the outflow. How many people are buying versus how many people are selling. Today, for the first day in a very, very long time, you actually see that the outflow is higher than the inflow. As a person who's followed this stock since January, I think it was my birthday, January 15th, I can firsthand tell you 90% of the days, or 95% of the days, even higher, like 98% of the days, this order flow chart always shows a positive inflow higher than a negative outflow. Always. And again, it's not just me saying that. You can check me on it. You can do your own independent research. There are historical sites that save these historical order flow charts you can look up, and the vast majority, I'm talking a significant amount more, inflow higher days versus outflow lower days is what you're going to find. But again, this is a tool I like to use, not just for AMC, but for any stock. It's always good to see what everyone else is doing, because again, you don't want to go against the grain, you want to go with the grain. And you go with the grain by learning to analyze a stock, analyze risk, so that you can better position and place your money based on the risk you find and you're willing to accept, right? So again, order flow chart, big key, super easy to read, super simple to understand. It goes along with everything else, the RSI, the MACD, and the candles on the chart that will give you conviction in a stock. But that's not all. Some people say, well, I don't want to look at charts. That's cool. I have some stuff for you too. There are websites you can source for information. Specifically, we will go with Fintel.io. So Fintel.io is a website I use specifically for stock research, not just for AMC, but for any company you want to look into, because you always want to see what institutional money is doing. You always want to follow the money, right? And luckily for us, they keep track of institutional ownership. And you'd be actually surprised to know how many companies actually own AMC. So these are going to be 13F filings as of June 30th, 2021, which is the most recent update. These will be updating soon, hopefully, as these institutions are reporting, so we can get a gauge as to whether they're adding or trimming to their positions, right? But off the top, you can see 37,441,000, 27,334,000, 12 million, 10 million, 9 million, 6 million. But what's even more surprising is who's holding them. So this is another hedge fund, Vanguard, BlackRock. These are two ginormous whales in the market who have significant amount of money vested in the stock market all over the place. But they are invested in AMC with this amount of shares. Yesterday, we actually talked about and looked up a chart for IWM, the ETF for the Russell 2000. As you can see, they're holding 9,177,000 shares of AMC in their ETF. So, for example, today was a red day, right? You want to validate that. Is it just us or is it the market? You would go into your chart, IWN, Russell 2000 Trust, or ETF, excuse me. Go to our 1 year, 1 day chart, and when in doubt, zoom out. And we can see right here, upward positive trend, as AMC has also been doing over the last 6 months. And look, today, negative red day, which means they dropped 0.70% or they went down $1.24, right? So now not just AMC, but also the ETF that AMC is in is also in a negative sentiment. We can validate this again even further, looking further into the market. Let's look at SPY for S&P 500. What do we have today? Another red day, down 0.46% or down $2.01. So now it's not an isolated incident. It is the market, right? SPY. Let's look another one. NASDAQ, QQQ, another ETF. What do we have? Down 1.10% or $4.06. So 3 major ETFs all in the red by a substantial amount, I guess, if you will, you're looking at it this way. And also AMC with a light red day, right? So all these 3 things are indicating to us it wasn't just AMC that was down. It was the market in general that had a negative sentiment. For those of you that don't know as well or haven't looked into it, we are kicking off earnings with some of the biggest companies in the country that are going to be reporting profit versus losses. There's a lot of anticipation. The market doesn't really know how it's going to go. We're hoping for really good numbers to continue this bullish run that the market's been having. But again, it can happen where a company will report negative or poor earnings, in which case there would be a negative impact to the market, not just to those specific companies, right? But again, Fintel.io, good resource to follow institutional money to see where pensions, ETFs, investment firms, hedge funds are all placing money. Always want to make sure you follow the money and go with the grain. You don't ever want to be the one going against the grain, because I promise you will find yourself in a really bad spot or with some pretty significant losses. Outside of Fintel.io, you can always go to Stonk-O-Tracker. Stonk-O-Tracker literally only tracks 2 stocks, GameStop and AMC. For this purposes, we want to see AMC. Again, it's going to give you a lot of the same information that the chart gave you, down to 5.66% or $2.28. The volume, we had 54 million shares traded today. Calls in the money for option contracts, or the option chain I touched on yesterday. You can see there are 19,501 contracts ITM or in the money versus, what do we have out of the money? Out of the money, we have 206,000 contracts that are out of the money for calls. Again, a call is a bullish sentiment play. A put is essentially a bearish play or a negative sentiment play. So as you can see for the week of the 2 in the monies, it's 19,005 versus 19,009. So puts beat us out by 400 share or 400 option contracts. But when we're looking at an options chain, as I was relating to yesterday in previous video, you want to look at an option chain to get market sentiment as to what the market in general, or everyone that's invested in the option chain, is thinking a stock is going to do. Obviously, if you go look at an option chain and you see that there are 300,000 puts in the money versus 10,000 calls, that wouldn't be something you want to jump into, right? Because that has a negative sentiment associated to it. I mean, you would probably want to get into it if you want to play the negative sentiment, which any of you are welcome to do as an investor. But for my liking, that wouldn't be something I would put my money into. But looking at the AMC Options Chain, as you can see for this week of July, we're pretty square even. For August, it drops down significantly. Puts outweigh us for August 6th strike date by a tune of 6,000 shares. August 13th, we're up 1,000. August 20th, here we go. The numbers start to increase dramatically. 40,000 versus 39,000. Obviously 49,000 is a positive sentiment, so that would be a good sign for us. But looking further deeper into the chain and to further out strike dates, like September, you see 55,000 calls versus 7,000 puts. That's a huge positive sign. Looking even further, for December, you see 15,000 calls versus 6,000. January 2022, 69,000 calls versus 19,000 puts. And then January 20th, 2023, 75,000 calls versus 4,800 puts. Clearly, as we can see from the numbers that are relaying information to us, we can see this has huge positive sentiment behind it because it is anticipated that it is going to short squeeze, right? Outside of this, another tool I like to reference for information and data is Marketbeat. Marketbeat has a lot of reporting. Again, it'll give you a lot of the fundamentals of Chartwell. But one of the most important things for me, since that's all we've really been talking about associated to AMC on any video you pull up on YouTube, is the short interest. A lot of people always have the question, well, how do you know they're still holding? When do you know they're going to sell? How are they going to cover? How are you sure? How are you sure? How are you sure? You can look up short interest on your own. Now, one thing you should always take into consideration, short interest is not required to be reported. Meaning if a hedge fund tomorrow wants to go short on AMC, they necessarily don't have to report it right then and there. They can keep that information on lock, or how much specifically is being sold short, right? According to MarketBeat, as you can see here, current short volume is 79,750,000 shares short. So that's essentially to the tune of $2.87 billion. If some of you have been following my IG, months ago, I told you guys and I posted on my story, and it's there for you to go back and see. I told you they had shorted AMC to the tune of billions, not millions. This validates that. We know at the least it's in the billions. How deep into the billions? No one will really know. We won't really know until they choose to cover. But the important thing to always remember, especially when talking about AMC, it doesn't cost an investor or a retail person like you, me, or anyone else to buy and hold a stock. It doesn't cost us money other than the cost of the price of the share. For hedge funds and banks or anyone who's wanting to go short, it's going to cost them short interest, which they'll pay daily for holding a short position. Plus, they're running the risk that if that stock goes up, they're going to have to cover at a much, much more expensive price. Quick example, imagine if you had gone short on AMC when it was at $1.91. Today, essentially, it's upwards of getting closer to $40 a share. You're upside down $39 for every share you hold short. Now, hypothetically speaking, say you're $1 billion short on AMC when it was $1.91. Well, you're now officially upside down $39 billion. But when you look into how high this potentially could go, the numbers literally are astronomical. To the point that so far this year within meme stocks, as reported by most media places, hedge funds and anyone holding short positions are down $12.1 billion. And we're not even done yet. Like we're still just in July. We still have to see the ending of this play, because this AMC, there will be an ending most of all of us are going to enjoy. Again, it's speculation, it's not financial advice. Do your own research, but when you go digging deep into all the information that's available to you to research, once you figure out how to do so, the numbers don't lie. You're going to hear me quote that saying millions of times over these videos, because it's 100% fact. Like, the numbers do not lie. And also, something I think isn't really talked about when you watch videos or posts on social media, it's not talked about. But think about it. Hedge funds went short on AMC, but they did it not on their money or their dime. It's with their investors' dime, their money, their investors' money. Again, hedge funds invest money for some of the most richest people in the world, elitists, top 1%. They are the ones, that's the money they're investing for them. That's the money they're going short on. So just imagine you are an elitist top 1%. You've given this hedge fund $10 million, and now potentially they're going to come back to you and say, well, unfortunately there was a miscalculation or an error on our part, and now we're going to unfortunately you have to take a loss. So instead of having 10 million, now you're only going to have a million or half a million or 100,000. Just imagine how that conversation is going to go. So always put that too in the back of your mind. This isn't their money they're playing with. They're playing with their investors' money that have trusted them to go out and invest their money to return and get profits, right? Which the way things are looking, it's going to be a pretty rough year for hedge funds. Again, that's not financial advice. It's speculation. Again, this is an educational video, and that is my opinion. But I guess we will see in the long run who is of the right opinion and who was of the wrong opinion, right? In either case, I'm super bullish on AMC. I've been since January. I'm heavily invested in it. I own shares, options of AMC in multiple firms through multiple accounts. And I plan on continuing building out my position until I see this ending. And these, I guess, examples I showed you today is how I'm tracking that and how I'm making the determination of when will be a good time for me to sell and take profit versus when I won't. And until I see numbers that tell me that the short interest volume is going down, I'm not selling a single share, not one, or a single option contract. In fact, I will buy more, and I will post that I bought more so that everyone who follows me or wants to follow me or wants to see can see. Because again, I think it's a good way to teach people. It's a good example. It'll really show people the potential of the stock market and hopefully inspire someone to want to do this too. Because again, I really do believe the stock market is an equalizer. If you learn how to use this tool and learn how to use the market, it'll produce significant amounts of money for you. Again, you just have to do the research, the work, do the reading, and be dedicated and passionate about it. Like, you have to have the mindset for it. That's another thing I don't think is really talked about a lot. If you don't have the mindset for this, if you don't have the persistence, the determination to go into it every single day, being 100% confident in your abilities and knowing you're analyzing this correctly, this might not be the play for you or the investment for you. Because that's one thing in investments you always have to keep in check is your emotions. Because a lot of these hedge funds, they will play with your emotions to try to get you to sell. Just looking at a chart, I mean, it's clear as day. I mean, it's clear as day for me because, again, I've been in the market. But when you look at a chart and you're looking at a chart of AMC, the fact that this spiked to 72, and since 72, they've dragged this out over the last 2 months, forcing the price down lower and lower and lower. That's a psychological play. That's them trying to tell you it's not going to go up. We're not going to let it go up. You need to sell. But again, numbers don't lie either. And the fact that that short interest is still there by the tune of billions, it hasn't gone anywhere either. And it's not going to unless you choose to sell. But if you choose to buy and hold, that interest is going to keep piling up day after day after day. Otherwise, I think you get the picture. I hope you guys liked the video today. Again, please like or comment below. Subscribe to the channel. If you guys are interested or have a comment, please leave it down below. I'll be happy to respond to it. Otherwise, check out my IG. Again, it's public. I have a lot more stock information there. It's in the comments or my bio of my channel. But again, up until next time, peace.